Hey everyone, welcome to Story Trading Special Edition. We got the CEO of Virtra here. We'll get to him in just 1 second. First, a disclaimer: Story Trading is not an investment advisor. Investing in securities involves significant risk of loss. We are recording this interview. Will be provided to our VIP members for the next 7 days, and then we'll be posting it up on social media. So it's Virtra, ticker symbol VTSI. This is a stock very familiar to our community. Was first presented as a trade of the week pick a couple years ago when there were some riots going on in the country. I actually presented that as a trade of the week pick, and then Mark Gomes, who was familiar with the company, championed it and presented it. We brought CEO Bob Ferris here in the past before a couple times, and Kevin Crawford jumped on and did a bunch of update presentations for us. So this has been a stock that's been very popular in our community, and actually one of the few stocks since it was initially since you initially came to us, Bob, January 24th, 2021, it's still up 16%. A lot of stocks have lost its gains in the last couple of years, but you're still up 16% since we first saw you. So that's great. Bob Ferris is here, but first, just overview for those of you watching this on YouTube, maybe not familiar. There's a military and police training company. They provide equipment to help train people on firearms use. And actually, real quick, let me just do this. Check this out. This is their old technology, but I want to show you something I just found just a second ago right here. Do you guys see this? This is their new technology, something like that, right, Bob? We'll get to that in just 1 second. So with that, right before I bring Bob on, just want to show you the chart. This is the chart of the stock VTSI, and what we try to do with story trading is to understand the story behind the trade. We want to make sense out of markets. So we do that by breaking down the data on 4 pillars: sentiment, catalysts, fundamentals, technicals. We look at everything to make sense out of markets. Why is VTSI trading at $5 today or $4.70 today? Why is it quote unquote undervalued or overvalued? By looking at these 4 pillars, we can come to understand what the market's thinking and empowers us to be better investors. So with that, I want to welcome Bob Ferris to the Zoom here to take the mic and the video. You there, Bob?
I am. Thank you, Ben.
Perfect. Awesome. I've been great. And also co-hosting with me, we got both Kevin Crawford and Mark Gomes here. We're going to go to them soon with some questions. How you doing, Kevin and Mark?
Good. Thanks for having us.
Awesome. Great. So, Bob, I'm just going to set things up here. You just reported earnings a couple days ago. Looks like a lot of exciting things in the earnings report, big record backlog numbers, record booking numbers. If you got a lot of traction lately, it did miss on the top and bottom line. So there's been some volatility in the stock because of that. But, I want to start. I just have like 2 or 3 very high level questions, and I'm going to send it over to Kevin and Mark. The first thing I've been meaning to ask you for a long time, we have co-CEO John Givens has joined the company a number of months already, or maybe quarters. So I haven't had a chance to talk to you about that move at all. That's a rare thing. We don't see that a lot. So can you give us some thinking behind that? What does that really mean? What's the different roles between what you do and what John Givens does? Any kind of insights, that would be awesome.
Yeah, thanks, Ben, and thanks everyone for tuning in. Appreciate the invite to be here. So it is unusual for co-CEO. I think it takes a very unique set of folks and personalities to work in a co-CEO role. John and I have been doing it now for quite a while, and I knew John Givens by reputation and by working asking him basically for some favors and to introduce me to some different folks. But he's been in the industry for about as long as I have. But the difference is that he was able to take a company with a brand new product, and he was able to really dominate the military simulation market. And I said that right, the military simulation market, the exact market that Virtra has struggled to get major traction in, and one of the few markets out there that is actually quite a bit larger than the law enforcement market, where Virtra currently has a very dominant position in police simulation training. John Givens would be a great addition to Virtra at any level, in my opinion, but what made him unique is that actually his greatest contributions to the company would come at the CEO level. And at being the founder of the company and having guided it for 29 years, it made sense that he would come in as a co-CEO, where I have certain areas that I focused on in the 29 years I've been in this that are different than the areas that he focused on. And so I really feel we complement each other in a big way. It's not as simple as we just divide the company in half and I focus on police expansion and he focuses on military expansion. His experience crisscrosses between not just business development, of which he is literally legendary in military simulation. His business development acumen is legendary. In fact, he was inducted to the Hall of Fame for the simulation world. And the company he worked at sold for $200 million in large part to work that he did there. So he's a very unique talent, and I'm super excited to have him on board at Virtra. I really believe that he can contribute in mighty ways at Virtra, and not just on the sales side, but across the board at Virtra.
Okay, cool. Thanks for that color. And is this something that is expected to stay this way long term, or is it more like is there an idea that sometime in the future he would take over, like a transitory thing?
At this point, this is our organization, and right now our plans are that we would remain with a two CEO leadership team. Yeah.
Okay, cool. Very, very interesting. All right. Next question I had is, you've come off, several quarters where there's been lots of different things happening. You had, the filings were late. There's an ERP implementation. You brought on John. There's some turnover with the CFOs. Also, we saw some stuff in the news. There was like some sort of activist that wanted to do something in the company. I don't know exactly what he wanted done. I wonder, are we past all of that? Let's call it restructuring. I don't know. I guess you got to get a new CFO. But are there any other kind of big hurdles there to get over, or what's the status of all those things?
Yeah, and thanks for asking about those, because those are headlines that cross desks and present question marks. We're limited on what we can say about those events. My summary of that is that that is largely behind us. I do think that when you shift a company from one organizational structure with one single CEO, and you bring in a co-CEO, and that co-CEO really digs into the company and looks for ways to improve, there can be some, in doing that, there can be some changes that not everyone agrees with, and shifts have to occur. So what you said is factually true. I see it as a company willing to change and willing to improve and go through the pains of doing that. And I think that the company, when the dust settles, and the dust is now settling, that we're coming out far stronger and far more capable for the future.
Okay. All right, great. So I'm just going to ask one remaining question for myself at a very high level, and then I'm going to pass it over to Kevin and Mark. One business question, right? So with this, there's a big focus on military, bringing on John. You opened that Orlando center, and it looks like there's more investment going in there. Some gross margins are going down. How are you thinking of this at a high level? Are you saying, we've had slow and steady growth for 17 years, whatever it is, and now are you like, let's take a risk to try to get some hockey stick growth? Is that the mentality? Is that how we're thinking of this? And is there a risk to that? Or is this just more of the same slow and steady growth like you've had for 20 years?
Yeah, great question, Ben. So yes, looking into the military market and the capability there to propel the company into higher level revenue, this would be more of a large step function than just a slow and steady. 17 years, or right now we're at 16 years of top line growth, is a very rare accomplishment for companies across any industry. As you know, right now there's turbulent times, and in the past, 2008, 2009 come to mind, 2001. I mean, there's lots of moments where the market has really shifted, and the fact that Virtra has actually, if you really look back at Virtra, we were really on an upward trend starting after 2004. So a lot of that trend actually started in 2004, which was when we introduced our very first simulation products for the military and police, was in 2004. So, that investment in Orlando is a move towards a potential for much larger jumps in value to the in the value of the company and top line revenue. Our margins, you mentioned our margins went down. Our margins have fluctuated. I think this last quarter they actually went up slightly, but or the 9 months went up, but we really tend to be around 50 to 60% gross margins, and we stayed around that level for many years, and we do hope to remain in that level. Not that we wouldn't double or triple our top line revenue if that meant sacrificing a little bit of margin. That might still make a lot of business sense. So, but yeah, we foresee, if we can get traction on the military side while continuing and not forgetting about our police side, we can't do that. If we can have both, our cake and eat it too. If we can grow on the police simulation side and gain serious traction on the military side, that's when this company's running on all cylinders usually.
Okay, great. With that, that's a good transition, I think, to Kevin. I think Kevin had some questions regarding that as well.
Yeah, thanks, Ben. Bob, just to kind of follow up on that military comment. John mentioned on the conference call that he thinks traction is probably still a year or more out. How does that sort of look for you guys? What is it? Waiting for something to come up and trying to bid your way in, or is it something that is just a matter of waiting for projects to start?
Yeah, thanks, Kevin. Great to see you. It depends. I mean, I hate answering it that way, but it's appropriate. In some cases, we need to find the right opportunity and show them our technology. Other opportunities, they've seen our technology, they're on board with it, but there's timing issues on their side. So, we've been in the market enough to where there's quite a few opportunities that we've earned because of our product mix. And some of our products are quite unique, and they've been field tested through the police side of the business many times, not always. Obviously, things like cruise served weapons are not devices that the police use, but a lot of various technology that we have has really been refined and perfected through our hundreds and hundreds of police simulation customers throughout the world. So we're in 40 countries. I think that's the largest number of countries of any simulation supplier, and so yeah, we think that the military, and John made that comment of what he foresaw. Those are estimates, as you know, and based on on the latest data he is seeing. But I really think fundamentally, because nobody can perfectly time things. Investors have a hard time perfectly timing things, or simply don't time things perfectly. I certainly, as an investor, I don't time things perfectly, but in business, it's also difficult to figure out exactly when things might catch on. What I like to do is think on a more fundamental level than that, and that is, if you supply a superior capability and you do it at affordable or possibly even lower cost than the other options out there, and if you have the right relationships, then you generally tend to succeed. And it might not be in 3 months. It might be in 7 months, or the timing of it sometimes, or you might have to wait for a certain opportunity to come around or get funded. So, but I think that being in the right position and having and invest, frankly, part of this is investing in the market. we have a lot of competitors out there that they decline to put their own money into new capabilities. And sometimes, frankly, it's not their own fault. Sometimes they have to hand their profit over. Maybe they're owned by a PE firm or what have you, or maybe the person directing their company doesn't have 29 years in simulation, and they don't exactly know where to put their money. And so I think Virtra's rise over the years since 2004 has really been a testament to being smart about putting money into new and better capabilities, and many times alone. Many times no other competitor has invested the money that we have or followed in our footsteps. And I think that's been to their chagrin, and one reason we have a large market share of police simulation.
That makes sense. And then kind of to follow up on some of the investment you guys have made, I know you talked about V3 a little bit on the conference call. Could you touch on it a bit more?
Sure. Thanks for that. Thanks for that question. I'm glad somebody asked about it, because I think V3 is one of those press releases that really separates the serious investor from the casual headline reader. I think the serious investor, when they look at the V3 PR and they dig into it, I think they might start to understand the power of that capability. So I'll try to summarize it for everyone on this call. Normally in simulation training, you have two options. You either do high resolution video, which is great at capturing people. You can see emotion, and the people look and feel real and fantastic for human interaction training, which, if you think about it, there's a big market for human interaction training. Virtra is dealing with some markets of human interaction, like police largely and military, but there's a lot of other professionals that have to deal with irate or disturbed or upset human beings that digital simulation could be beneficial for. So, that's one type. The other type, which is really popular in military circles, is 3D, where every entity, including humans, are CGI, computer-generated images. And for better or worse, sometimes they just slam that through, even if that's not the best method for training. So what we find happen, and we've seen this happen a couple times, where a pilot program will kick off and they will try using pure 3D avatar characters, and those pure 3D avatars do not succeed because people can tell they're computer generated and they don't look and feel real. What you're seeing on the screen there are some captures from our supplier of this technology, 4D Views, which we have exclusivity on for police and military markets. And if you zoom in on these characters, and these are people doing lots and lots of various high action and thrilling stuff, but it's remarkable the realism. We focus, of course, on emotions and things like that, on if where you can tell, okay, this person's angry, this person's laughing, and because their resolution and their capabilities are so good. So what Virtra is able to do today is we're able to put actors inside of our studio, capture them doing various training things that relate to a training scenario, and then we can use that captured character over and over and over again, and it fills in our library of content. So if, let's say, in the future we add a headset-based system, we could use the actual 3D, the 3D character that also has photorealistic video attached to it. So it's hard to say attached to it because it literally becomes that character. So the three-dimensional mesh is calculated by the computer. The video overlay is calculated by the computer. And to tell you guys an interesting story, we had Lon Bartel, our leader of our content group. he was going to do a test of this technology. So he put on the most elaborate, difficult shirt he had in his wardrobe, and he went into the studio to get captured. This was a shirt that had all kinds of weird lines on it, and everything was symmetrical. And he went into the thing, and we thought we'd have to throw it away because it was so complicated. The system is so good that it captured him and his shirt so perfectly that we now have a headset demonstration where you put on a headset, and inside the headset we talk through the good and bad parts of headsets and the limitations of current headset technology, and we show him with that shirt on. The thing we thought we'd have to throw away because it would probably break the system is actually in our demonstration of the technology. It's that good.
Okay, that makes sense. Mark, if you don't mind, I'll ask one more question, just a follow up here, and then I'll toss it over to you if you want.
Sure thing.
Bob, can you talk a little bit about the markets that this applies for? I think it makes sense from the police, but is it more than that?
Yeah. So it's incredibly valuable for near distance human to human interaction. So that could be for military. That could be checkpoint. That could be simulating cultural encounters that they might have in a village with village elders or with local people. It can also translate into some marksmanship, but as you get further away, so as distance increases, once you get out to 50 meters, 100 meters, 200 meters, then this technology has its limitations. There's still some unique things, and we have a patent application out there that relates to some of this technology. And so there is some interesting application for this in the realm of shooting at running targets and things like that. But you're right. The big applications are more closer to you, to where you really notice if a human being is realistic or not. But I would argue that field of applications is quite large, and I really believe that Virtra is, yes, police is a big application market of that capability, but I think that there's other markets that this could expand into in the future.
And then one more clarification. Sorry, Mark. Does this mean that this is like solely pre-recorded video, or are you able to kind of turn it into a video game character that they can kind of go from one like set of filming to another, and just you get unlimited amount of options at that point?
Somewhat in between. So we do have the ability, like if we recorded you, let's say we needed somebody who would walk up and open a door. So we actually would expect there to be a 3D room with a 3D door. Those are easy to make. Humans are incredibly hard to make in CGI. So let's say we use a volumetric capture human using V3. So the person could go up to a door, and let's say just, normally CGI is very flexible, but let's just say we wanted their hand to be slightly higher than it was recorded. We actually, with 4D Views, our supplier, they have a unique software package, and one reason we selected them, we can go in, and after it's recorded, we can adjust the height of their hand. Or if you and I were shaking hands, and in the simulation, you're recorded separately than I am, even though you and I could both be recorded together in this. Our studio, I believe, is the largest in the world for volumetric capture, and it does certainly have the cleanest audio profile probably of any volumetric capture studio in the world. So we could literally adjust the level of my hand so that we could shake hands at the right level. Now, this works to an extent, but let's say we wanted me to do jumping jacks, well, the best way to do that is record me doing jumping jacks. That's the easiest, straight, most cleanest way. That's the most clean way to do it. So.
Got it. Thank you. Mark, you want to jump in?
Hey, Mark, before you jump in, someone has a related
Sure.
question here in the chat. the equipment, you need special equipment to capture all this, special cameras, or where's all that equipment?
Yes, so we've already paid for 90%. 90% of all the cost of this has already been in our past quarters. It's already installed in Chandler, Arizona, at our new headquarters, a building that we purchased, and it is very special equipment and special algorithms. There's patents involved in this unique approach, and 40 Views is the company that we selected. There's really two main companies that do this. There's MetaStage, which is owned by Microsoft, and there's 40 Views, which is out of France. Our opinion is that 40 Views was a better fit for us. We really like their production focus. We feel we can do a lot more and spend a lot less money. 40 Views also allows you to have a computer, basically a series of supercomputers on site that will locally render and process all of this work, versus with the MetaStage, you have to send it up to the cloud, is my understanding. So it's a different way of doing it. And I don't know a lot about the Microsoft version of this, but the 40 Views version of this, we were really impressed by, and we really think it's the leader in the world, particularly for what we do with simulation training and human interaction, and we have to do different branching capabilities. But to sum it up, what we're able to do now is we're able to get the best of high resolution video, the best of 3D CGI avatars. We're able to get both of them. We're able to get a higher quality human being that is actually 3D, that actually has depth to it. And we're able to do that for the cost of electricity to run computers and cameras. So extremely low ongoing cost. We did have an initial investment. We consider that part of the moat. And then we do have an exclusivity arrangement with 40 Views, which is another part of the moat. You need a lot of square footage. You need quite a bit of infrastructure. It's not an easy thing just to add, but you can't do this with just a bunch of smartphones out in the field. You really need a proper setup to do this, and to do it at a very high level of quality.
Fascinating. All right. Good stuff with that. Let me turn over to Mark Gomes. How you doing, Mark? You got any questions for Bob?
Sure. I'd love just kind of an update or reiteration of what your target operating model looks like, and I'll go from there.
So we like recurring revenue just like all other companies. Our main model right now is a bit like the Apple model, where we have an ecosystem. They buy the simulator. It includes the software. They can buy additional software. They can buy warranty packages. Our recoil kits are sort of the accessories where they can add on as they. And it's shockingly how often this happens, where we sell a system and then a year later they want to add a different pistol to it because they have some other agency that wants to use it. So we get these other additional sales afterwards. But once they're in that ecosystem, right? Once they've spent, $120,000 for the simulator or whatever it might be, then they tend to stay Virtra customers. They tend to upgrade their system. They tend to maintain warranty. But within that ecosystem, they need everything to be Virtra branded. They can't really piecemeal together, save a few bucks and get an off-branded tracking camera or get an off-branded recoil kit and think it's all going to be compatible and working. So it's really an ecosystem. It's hard to set those up, right? Virtra, it was a bear to go from a company with no police or military simulator to a company with not just a simulator but an ecosystem where you can get taser training, you can get OC training, you can get firearm training, you can get heavy crew serve training. You have all of these training capabilities amongst all sorts of different simulation configurations. You can do one screen, you can do 3 screens, you can do 5 screens, you can do 1 screen portable, you can do 3 screen portable. So you have all of those configurations, and then you have all the different recoil kits. You can do Glock 22, you can do Glock 19, you can do M4, you can do SIG. There's all, there's just a lot of the ecosystem has to be built out to be incredibly large. And as everyone on this call is aware, Canada had a big competition and decided on Virtra for all of their law enforcement related agencies throughout Canada. It was a great win for us. It's a standing offer. And I think a big reason that they went with Virtra is that not only do we have this big ecosystem of all of these different areas, but I think they noticed that we were the best in the world in each category. So our training content was best in the world, and V3 just pushes it even further, because now it's almost like we have a color camera, and all of our competitors are still using black and white cameras. So it's a big advance for us on the V3 capability. Recoil kits. We have some of the most amazing equipment to both prototype and produce recoil kits. So we're world leader in that. Simulation platform. We're the one who invented multi-screen simulation. So we have the most mature software, the most experience with multi-screen simulation. So the 5-screen, 3-screen, that we lead the world in. And so the software, the content, the recoil kits, and then accessory wise, the threat fire device. We have a patented capability to use electricity to simulate return fire, and so that brings in a whole lot more realism. It gets skin in the game. It changes the whole dynamic of training, and then the human performance and metrics that we're adding under the Admire program that was announced. That adds a whole nother level to the system. So I really think that when you look at this whole ecosystem, it's pretty rare that a company is a leader in each segment. Usually one leader is really great in software, but their hardware is not quite up to snuff, or things like that. As you think about Apple versus PC, it's pretty rare that a company does that. And frankly, I think a lot of it has to do with just time and money. We've put more time and more money into all of those different segments than other companies.
Right. So
thanks for the question.
I mean, how do you look at that in terms of where you are in your, investment cycle versus your monetization cycle, and how can we see that progress? Because I mean, a lot of the things that you mentioned, is stuff that is relatively new or nascent to the top line.
Yeah.
But still impacting the operating expenses, right?
Yeah. No, that's a fantastic question. So, and that's a difficult one to answer, but I think I can get in the ballpark. We are setting up our facility in the new building. We still have some work to do there. We still, translates into, we still have some money to spend there. The V3 investment is pretty much done. We're certainly be doing some custom software here and there, but a company like ours is always going to be doing some custom software. So I think that I'd say it's a near to medium term horizon to where we shift and have made all of the smart investments we're nearing the point where we only can make smart investments. We're not just going to reinvest into things that that have diminishing returns. So we're very careful about that. I think John and I both have a good track record of being careful about that. But I do think the monetization of our lead in the industry is around the corner.
Gotcha. And along the lines of what you're talking about in terms of developing your recurring revenue revenue streams. To this point, to what extent would you say that your progress on that front has hurt the optics of your top line and your expense lines? In other words, if you would just take revenue as it comes, right? What would the difference be? Because you've been sacrificing that top line revenue and the immediate gratification, so that I assume your growth on a headline basis doesn't look as good as it really is. So how do we look at that?
So, I believe you're referring to our STEP program, our subscription program, where they can pay over many years. So you're right. The optics of that would be, yes, we've sold a V300 simulator. That's our flagship top of the line simulator. But when it's spread out over 3, 4, 5 years of them paying a monthly or quarterly or annual, they don't, and then at the end they don't own the simulator. They paid for use of the simulator. So I'll go back in time for a second to when we began the STEP program, and one of the very first STEP programs that we sold was, I think, tells part of the story, and that was a government customer of ours told our salesperson, I really like your simulator. I put it in, and I think I'll be able to buy it in about a year. And so when the STEP program was finally announced, that salesperson, the moment he could do it, he went back to that customer and said, hey, just so you know, we have this STEP program, and he laid out how it would work. And that person said, oh, well, based on that, I can buy it in 2 weeks. And the key part of this story is he bought it in 2 weeks. He actually submitted a PO in 2 weeks because it went through it went through operations. And right. So he was able to actually do it. And you're shaking your head because you know the reality in sales that if we waited for that year out, full boat, all money kind of upfront on that simulator, that person could have changed jobs, could have changed his mind. Any number of things could have happened. So to be able to give our sales team the flexibility of saying to the customer, you can pay a little over time for this, or you can pay, or if and some people get grant money, they want to pay for it up front because they have grant money. Because we have that flexibility, I think we gain overall. Now I will tell you, it is really, really nice to go into a new quarter knowing that we already have STEP money coming in, flowing into the company. So we don't have a salesperson who has to close a sale for that money to roll in. And we free them up to go find new sales and close those new sales. So recurring revenue, is wonderful for a business and great. We just decided that we wouldn't force everyone into a recurring revenue model because government customers for us, sometimes they can't do it always recurring revenue models, subscription, and other times they can't do full purchase. So what we want to do is have both available. And I think ultimately, Nat, the impact on Virtra has been extremely positive. Mark, if I could go back in time and do it again, I would have tried to set up a subscription arrangement earlier than when we did. That's what I would change.
Interesting. So from where we sit right now, I know we can infer certain things by looking through the SEC documents. Just how significant is that to the business right now relative to what it would have looked like? And I know, right, the story that you told, how quickly you could get the deal done, but a lot of these deals would get done anyways and whatnot. I'm just getting a sense as to, how underestimated is your real underlying growth, right? Like if you had gone to all subscription from the start, what would your growth rate look like now versus what it looks like now because you're sacrificing some of that optical growth right, to get that long-term recurring revenue?
The easiest way to explain it is I think we would be a smaller, weaker company sold simulators, or if we force everyone to just be on a subscription or don't even talk to us, I think we would be a smaller, weaker company.
Gotcha. Thank you.
Quick
Thank you, Mark.
follow up
Good questions.
there.
Appreciate it.
Yeah, good questions. A quick follow up, and I think I know the answer based on how Mark was asking it. But have you disclosed like what percentage of your revenue is STEP versus not STEP? Is that something we have somewhere?
You have some data, and you have enough data to know that it's that STEP, the subscription levels are now are now up into millions of dollars. So there's some data in our report that you can glean some STEP information from.
Okay, cool, great.
On the topic of STEP, Bob, are we still looking at like upper 90s or 100% retention, or is it starting to fall off?
Last I heard, I think that's what you said is correct. Upper 90s, nearing 100% retention. I believe we're still maintaining that amount. I've been told by other people in the subscription world that can't last. Like that's an unreasonable level. But I think there is. Being that we work, and I think this should be pointed out because I think it's lost on a lot of people. It certainly was lost on me until I got into this market. But because we deal with public agencies, there is a uniqueness about the fact that they pay their bills. If they can get the approvals, which they don't have unlimited money, but they can. If they decide this is worth it, and our goal is to make sure they understand how much value that we bring for training and for their own liability's sake, then they are we can have very good custody to go from one simulator to 15 simulators. And as you guys have probably seen, we've gotten recurring projects from Customs and Border Protection and other federal customers of ours, and those have been fantastic recurring, not necessarily purely recurring. I mean, it's at their discretion year over year, but they, being able to have the same customer keep ordering from us has been very beneficial to us. So yeah.
As you bring up CBP, you received two like $4.5 million orders roughly. I think those are like the second and third biggest orders you guys have ever received. Is that something that might happen again, or is it a one-off that just a situation?
Yeah, and just to be clear, the combination of those two was being the 9 million that's up there. We have received, $6 million orders, $4.7 million orders. We've received quite a few large orders, but yes, CBP was one of those. The other was an unnamed federal agency. It totaled about 9 million. Helped push our quarter bookings up beyond 16 million, and so that that third quarter we just finished. Was fantastic on the sales side of the house. Our sales team collected a whole lot of sales orders during third quarter, which, obviously we're really happy about. You've got to have a customer on the other end. Doesn't matter how much capacity you have. It doesn't matter how many buildings you buy. You got to have customers wanting your product, and so we were really happy about that third quarter.
Circling back to the military opportunity, I think you guys raised money, maybe it was last spring, $20 million, I think. Is that I know
18 million gross before fees.
Yeah, I think some of that was to kind of bolster the business and prepare for military growth. Is there sort of a way to think about how much is needed as the timeline for some of this military stuff gets pushed further out? Should we expect a raise or anything like that?
Yeah. So yeah, I think a good way to think of that is our plan is to be a profitable company and have profit be generated. The unique thing about Virtra is because of because we first matured the police side of our business, we now have, as long as we do the police side of our business right, we now have profit generated from that side sufficient to help us jump into the military market in more meaningful ways. So, and that's a unique thing that Virtra has that other companies that purely focus on military don't have. And frankly, it's as you can imagine, if your only customers are, hey, I need the U.S. Army to buy from me, or I need the U.S. Marines to buy from me, or I need a foreign armed forces to buy from me, those businesses are obviously subject to a lot of risk of a few customers that could come and go and really impact those companies in positive and negative ways. Virtra is very unique in that we have some pretty amazing upside potential. You could imagine if we landed a huge military contract, in the coming years, or if we landed large international contracts in the coming years, that could really be a major change of the company. That also, as you probably know, would make the company a prime candidate to be bought by a much larger company. If you land a very attractive contract, the government usually sticks with the company if they've won a lucrative contract and they don't want to switch. So that company sometimes, a larger company buys them out. So there's always that potential. So, it's a unique combination of we have good business to pay the bills and allow us to do things like buy a building and invest in V3 and do things like that. But at the same time, we plan to be year over year profitable, and that profit, should start to accumulate in our bank account. And we're open to the idea of buying other companies and doing other things that would be extremely, accretive to our shareholders.
Thanks for that. I'll pause. Ben, Mark, anyone else?
Thanks.
I'm good.
I can keep going.
Please do. You're on a roll.
Sorry, I was on mute, but go ahead. Kevin, you had another one?
Bob, you talked kind of on the R&D aspect of things. You said on a recent conference call about having paid R&D essentially for a new product. Is that related to V3 or is that something else?
That was something else. Yeah. And just to refresh everyone, we had a drop in margin, a rather significant drop in margin for a quarter. And in discussing that, we had said that we had won a contract, but we did it at very unusual margins, and so it was termed something like essentially a paid for R&D project where we retain the IP, but we don't make a lot of money, but we feel it's an important use of our time and positions us better for the future.
That makes sense. Thanks. Quick question. What's headcount at this point? I don't think I heard a number.
The last headcount was 110 employees.
Okay. I think it was at 125. Is that part of the
yeah, that's part of the
restructuring? Sorry.
Yeah, and 110 was maybe a month ago, so that could be out of date. That was the last time I pulled a head count, so I would not quote me on that number as of today. It could be 120 right as of today, because I know we had some open positions and I know we filled some of them, but yeah, I think it's probably between 110 and 120 is what I would say is where we're at right now.
Where else can I go? As far as the economy goes, we all know kind of there's maybe tumultuous or things are changing. Does the thought of a recession at all kind of worry your business?
Yeah, interesting question. So we had, I think, I've had a couple people that are analysts out in the market, and they follow various companies, and they made a comment to me that that a lot of the companies they follow have been really struggling with market conditions and with what's going on out there. And then they said, and then there's you, and you had this huge third quarter of enormous, enormous numbers of new sales orders received. Why are you so different than other companies? And and in many ways we aren't different than any other company. I think part of it is that we sell to the public sector. So those are the folks that collect taxes, and they get to spend based on the taxes they collect. And then, they also get to spend debt if they decide to. So I think we have, being able to sell to the government is actually a real advantage during times like these, but only if you have a compelling product. I mean, everyone forgets the compelling product part, like as if you can just set up a shop and every agency wants to send money to you, and that's so not the case. You really have to justify why they should spend money with you versus a whole lot of other options that they can spend money with. And that's why you hear us talk so much about effective training, because if we don't get that right, then they really don't have a reason to send us $16 million worth of orders in a quarter. They just don't. So I think that's a critical part of Virtra, and I think that's sometimes overlooked. But we do have inflationary effects at Virtra. We've had increases in costs and staff costs and whatnot, and we mentioned that in our earnings report. But I'm really looking forward to next year. I'm looking forward to the end of this year. And I think that our customers appreciate our products well enough to allow some absorbing of inflation and things, which we need to pass some of that on to our customers. But really, I think like John Givens had mentioned, that 2023 and beyond is when our shareholders might start to see a lot more fruit. I think that there's been a whole lot of planting and a whole lot of farming, just good old-fashioned farming that's not the most attractive thing in the world to watch, that's gone on essentially since 2004. A lot of tilling the soil. We had to educate the whole market that they needed multi-screen and more realistic training, and frankly now that's the standard. But in 2004, we were looked at as sort of really way overzealous training folks, and now we're considered in many ways the gold standard in the market. But yeah, I think the best days are ahead.
Great. Thank you. I think let's the 3 minutes of 10, so I think we're gonna wrap it up here. I do want to put a bow tie on it with one final question. But first, thank you, Kevin and Mark, so much for your questions. I got a great understanding of the business here, Bob, very helpful. And, at StoryTrading, one of the things I like to do by learning about all these businesses, all the different aspects of the business, is to try to identify when there's an inflection point in the company, what sort of catalyst is going to take you to that next level. So am I right, after listening to this tonight, that is it really that big military contract that maybe the earliest we see that is October 2023? Is that when there's like a step change, or is there some other catalyst that we can look forward to in the next 10, 11 months before October that might be an indicator of some sort of inflection point in your company?
Yeah, thanks Ben for that. I think that an inflection point for us could be seen as either a combination of a lot of big contracts that decide to go with Virtra, or potentially one or more large military or international groups that decide to go with Virtra. And the reason that might be really remarkable is that if we do our job right at Virtra, there's a chance that we would get a large bump in revenue and have a lot of that come through to the bottom line. And I think that's what often really changes the value of the company, because the company is producing a lot of money per share, and it should affect the value of the company. And so I think that whether we do that with one big military contract, or we do that with a lot of law enforcement groups that decide that they really need Virtra, I'm not sure, but I do think that if we can be careful about our margins, be careful with how we spend money, especially as we start to slow down some of the investments that we've made. We don't want to stop investing in our future. We have to do it, but we just have to, we want to get a lot of value off of that investment that we put in. We're not afraid of investing, but we are afraid of wasting. We cannot waste time or money at Virtra. So.
Great. Thank you so much. It's been awesome. Again, thank you, Kevin. Thank you, Mark. Bob, we'll hopefully catch up with you sometime in the future again. And I guess that's it. Any closing comments from anyone? All right. So we're good.
I just want to say thank you so much for allowing me to tell my story.
All right. Thank you. Thank you, Bob. And I just want to let people know who are not yet part of the community, you can head on over to StoryTrading.com and become a VIP. We have a 7-day free trial. You can become part of our collaborative community. We have an app you can get access to chat with people and show up to these events we do and interviews with CEOs. Also, make sure to follow us on YouTube and on Twitter at StoryTrading. And with that, everyone, have a great night. Thanks for joining.